Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can hear all of our podcasts at americastalking.com. To support podcasts such as Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Tuesday, February 20th. And joining me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, let's turn our focus to the marketplace. We are kind of in the midst of earnings season. In fact, the quote-unquote Magnificent Seven will all have released their earnings, I believe, by the end of business today. But there have been some surprises elsewhere in the market, and I think one of them, for me anyway, was Walmart. Walmart has been kind of, just one of those companies, I think, that gets kicked around or overlooked, or maybe, people thumb their nose at Walmart because, maybe because of the primary customers that it serves.
Chris, I don't know what you mean. I really don't know what you mean here, because let me tell you something. Walmart customers range from all walks of life, my friend. In fact, when the economy starts to slow down, people turn to Walmart.
No doubt about that. I'm not saying that that's my personal opinion, but I think Walmart gets made fun of a lot. If you have to go and buy something at Walmart, I don't know, maybe your friends would give you grief about that.
I'll tell you what, personally, since we're talking about it, personally, I have a problem with the way the shop is laid out and run. That's just my personal preference.
Okay.
I thought I'd put that in there, but, ultimately, I think it's a great company.
Well, however they laid it out, it's making bank. It beat the holiday quarter earnings, and it beat revenue expectations. And apparently it has, enough cash on hand to go out and buy Vizio, which is a TV maker, which, to be honest with you, I thought was an in-house brand. I wasn't even aware of the fact that Vizio wasn't something that Walmart already owned. Mm-hmm. But they are just rolling. And looking at the market today, up year to date, more than 8%. They just seem to have things going, and they've got it going on the e-commerce side, which is, I think, even that much more interesting, because I still think that most Americans equate Walmart, with these massive stores that, again, roll into towns and kind of disrupt, the local independent business owners. But, it's a monster, and it totally just seems to be doing the right things at the right time. And maybe you're right. Maybe this is about, the way that people react, when times get tight and inflation is higher, that Walmart, of course, what's their slogan? Great value.
It is.
Maybe Walmart is appropriately positioned for times such as these.
Absolutely. That's it, man. Credit card, debt is soaring. Right. And I'm not saying that to scare anyone, because I think when we look at the data a little bit more carefully, we realize that, incomes have soared too, and if we look at total spending as a share of, discretionary income, total debt, household obligations as a share of income, they're still kind of, they've increased, but they're still kind of low compared to the long run average, if you will. So people are still okay, but, there's ranking up the credit cards. At the same time, the labor market's slowing, right? Wage growth is slowed. Hiring is slowed for sure. Yes, we had an uptick in wage growth in January, but the trend is cooling, right? Things are cooling. And so companies like Walmart are expected to do better. Right. And so I'm not totally surprised. I would say, if you look at, and again, on the theme, the cooling theme, right? You look at Visa, right? The credit card, the bank. Visa, has a spending momentum index where they basically show, how basically people who use Visa are doing. And, and they show they actually show discretionary spending versus non-discretionary spending. And then nationwide spending momentum is cooling, right? There was a small uptick during the holiday season in December. We saw the uptick everywhere in December, but yeah, cooling in general across the whole country, right? You look at MasterCard also has their spending pulse index, and they do that. They look at that stuff, and the consumer's cooling, but it's a moderation, right? Like when I say cooling, it's a moderation. It's not a big decline. You look at retail sales this month, retail sales kind of fell. They were up a lot in December. They fell in January slightly. So the consumer is cooling, and that cooling, I think, is going to be a good news for places like Walmart, Costco, and so I'm not completely surprised.
So let me ask you this one last question. I mean, I guess, that you referenced Costco, and Walmart, and they both are, I think, in the minds of most American consumers. I mean, they are the epitome of big box stores, right? I mean, they're huge. They take up a lot of space, and they're omnipresent, across the United States. Are you surprised? I mean, so I'm just drawing this directly from the CNBC story from this morning. They're reporting that global e-commerce sales at Walmart are up 23% year over year, and in excess of $100 billion in total. And in the United States, e-commerce rose 17%. And they're saying, as shoppers use curbside pickup and got orders delivered to their homes. Are you surprised that Walmart is as competitive as it is in the e-commerce space?
No, I'm not. I mean, it was part of their strategy.
But they were late. But they were kind of late to the party.
They were. No, that's true. They were late to the party, but I don't know. I don't know what they're doing internally to catch up. But essentially, I probably need to pay attention a little bit more. But essentially, I kind of expected them. Like the early movers don't usually stay out at the top by themselves very long, right? They have that advantage, but other people show up. And Walmart has the cash. Walmart has the name brand. It's been around forever. It's really in a good position to make that move, So.
Well, I think there is something to it. I mean, with Walmart and Walmart's buying power and the relationships that it has globally, that I think that it can rival Amazon. Amazon pricing, and I'm forgive me, I'm going to be somewhat generic here in my remarks, but I've noticed in particular, through the Christmas season and in just recent things that I've been, wanting to pick up, I'm on the road and I need to get something. I need it to be home when I get there. Amazon pricing has been not phenomenal, and around just certain odds and ends kind of stuff. And I have not yet flipped the switch and started to shop Walmart for these same kinds of items because of the habit. But I may. It might be time to just bring a little bit of competition into my own personal consumption. Well, let's call it good there. Thanks as always, Dr. O. Subscribe to Everyday Economics at americastalking.com.